Hi guys, welcome to another episode of Build by Visible. I'm Yemi and I'm with Dami as always. We're excited to introduce a new segment to you, our viewers, which is really centered around discussing news and happenings in the ecosystem and also sharing our perspectives. We're also very excited to welcome a new host. I'd like you guys to give a round of applause to our new host, Tage. Woo!
Let's go, let's
Hey,
go.
Hi, Tage. Do you have any words for the viewers? Be a quick intro.
Speech, speech,
quick
speech,
intro.
speech. Yeah.
So I'm Sage. I'm a reporter, and I write about African tech and venture capital from Lagos, and I'm excited to be here to talk everything African tech with Dami and Yemi. And I don't know, and discuss what we think is important for our viewers and listeners.
Yeah, that stage is awesome. So, just context on the segment before we jump into the episode. So, we realized there's a lot of exciting things happening in the ecosystem, and then beyond just the articles that we read, we want to be able to share perspectives and then insights as to what happens and why these things happen. And for the first episode, we have some really amazing topics to discuss with you, and we will kick off with the conversation around 54 gene.
Okay, are you just gonna leave it like
Yeah, stage.
that? Anyways, so I think was it last week? Yeah, it was last week. Yeah, so um, there's some news out there from local outlets. Benjamin Dada, Tech Cabal, Tech Point, right? Saying 54 Genes ex CEO, Abasi, who stepped down. I think last year October or so. Following issues with the company that till now no one really knows the full scope of the issues that went down before he resigned. Um, he started another company, another genome genomics company, right? What's the name again?
Syndicate Bio.
Yeah, Syndicate Bio, and he's literally trying to do what 54 gene or what he tried to do is start with 54 gene, right? And people were kind of dumbfounded, on Twitter and other social interactions like on WhatsApp and all that. Like, okay, no one knows what happened. I mean, he was accused, of several things. Fifth Forging he didn't say, and now he's like, okay, starting the same type of company. And Fifth Forging, according to reports, has kind of folded, I think, around July this year. So there are lots of unclear things, right, around, how he left and, how Fifth Forging so it's like for some people, right? It's like, okay, how many chances do we give founders, right, when they mess up, their first try? Now, 54 Gene is gone. I think they raised about more than $30 million, right, from big time investors, Juvon Capital, Afrique Invest, I think, or Kate or Kaif or something, right? And this is like, the company has just gone, and here is the founder who is remote to have, participated in financial, I don't know, in preparatory, um, starting a similar company. I mean, those claims are still like, they're just claims, right? But then it's like bringing up the conversation about giving founders a second chance and if they actually deserve that. I think that's up to the investors to decide, right? Because we've seen similar instances, right, in the US, right, with Adam Newman, for instance, WeWork, and now I think Flow, backed by A16Z. And, and also this guy called Parker Conrad. He used to run Zenefits and used to be like a HR management platform. Then he came under fire for compliance issues. He got fired and he left to start another company, which is doing well now, Rippling. Right. So there are cases of where founders have done bad with the first company and, the second company, they perform better. cases where the founders do bad with the first company and do worse with the second company, right? So I think that's a conversation, right, that should be had rather around giving founders a second chance at and whether they deserve it in the first place if they didn't manage the first company well.
Yeah, I think it's a bit early for the court of public opinion, like I like to call
Yeah.
it, because it seems like everyone is going hard. Like, oh yeah, why is he getting a second chance? First, I don't have insights on what happened or what didn't happen in
I don't think
54
anyone
Gene,
does.
but having worked as an investor, I'm sure any investors looking at Syndicate Bio, if they don't do diligence on what happened in 54 Gene, then they have a problem. But post diligence, a lot of people really don't see how hard the life of a founder is. Because, like, I'd say the first time you build a business, most times you probably know absolutely nothing about it and you make mistakes. And when we look at some of the biggest startups in the world, they came off the backs of people that made mistakes while building companies the first time. Travis with Uber. Uber wasn't his first startup. I'm not saying Uber is like the poster child for great startups or anything, but and
Mm-hmm.
Travis is definitely not the poster child for great founders. But he made mistakes. He learned from some of those, and those things helped him become a better founder. Like, even when you look at the broader picture in Africa, some of the best performing startups we know are businesses that have returning founders. So you look at Ulesson, for example.
Right.
Sim built Konga and then Ulesson. And Ulesson is arguably probably one of the best performing edutech startups in continent in a very, very hard sector to build. Because like the knowledge that comes from the first startup is relevant here. And I think that's part of what Abasi will enjoy when fundraising because biotech and Africa are two hard things to put together. And then previously, he had been able to convince investors, both local and global, to buy into this idea of biotech for Africa. And I'm very sure, like, the lessons from 54 Gene are not forgotten. It probably becomes the foundation for building Syndicate Bio.
Interesting.
Mm,
I want to argue for the other side though. Um and it's a conversation that has come up recently around rewarding bad behavior and accountability for founders. Because sometimes people when people build startups, like they get tons of funding. Yes, they make mistakes, but the question is like, at what point do we start holding like these founders accountable? You
exactly.
know, because it's like, okay, second chances, like there are people that don't even get the first chance and you're getting a second chance. And it just seems unfair, as does most things in life. Right? Most things in life are unfair, but I think it's just
Yeah,
a thing about accountability. Like, how do we start holding them accountable, and when do we start holding them accountable? Because like 54 Gene raised about $30 million, and this was like pre devaluation. So there's like a ton of money, and there's basically nothing to show for it. And then now there's a new business, the same business, but even on a global
exactly.
scale,
So that's the
which
problem, right? So it's the same business that
and
couldn't scale the first time,
mhm.
and like
And
there was no proven revenue model for it, and you're doing
yeah,
it the
and
second time.
I really second that on a global scale, which means that you're even able to get access to more investors because maybe in the past investors would have said, "Oh, we can't fund your business because we don't know enough about the African tech ecosystem to fund
Mm-hmm.
your business." But now it's like it's a global business, so you have access to more investors. So then, if you're not able to do it on the African, like in the African ecosystem, what's the assurance that you're able to do it at a global scale? These are the questions that like a lot of people are asking right now, and it just seems like there's no answer. Also, because we didn't really get closure about what happened at 54 Gene, also, so it's also like
Yeah,
just so many
there's
open
also that too.
questions. Yeah, and everyone's just kind of like, okay, what's gonna happen? And now we're just having to watch it and watch things and see how it plays out. But yeah, just very interesting stuff happening.
Yeah, we just have to watch anyway. Because I say this often it's a founder's job to build, it's an investor's job to invest. So everything Davi said is valid, but these are questions that the investors should ask themselves as they look at 54G. Like, If Abazi decides he wants to start 5 startups simultaneously, that's great for him. It's the people that choose to give him money who need to look and say, hey, okay, is this the best way or best time to put in this money? And then, if yes, what do we need to do to enable we protect our investment? Like, what level of diligence is fine? What level of controls do we need to put on this business? Because that's really the job of an investor. It's not just writing checks, it's writing checks and finding ways to protect your investment.
I agree, but I mean, just to add one more thing, I feel it kind of hurts the ecosystem in general when, like Dami said, some bad actors are not. I mean, I'm not saying Abasi is a bad actor, right? But since we don't know what happened or what transpired with 54G, and we've seen other instances, I think in the past couple of months. So, for instance, the what's it called, the founders of Dash and Float, right? So these are like second time founders, and Dash is like a fintech, Float is a fintech also, right? And they're going through their own issues, but they had a startup called OMG Digital, I think back in 2014 or 15, one of the first, or 2015-16, one of the first um, startups to get into YC back then, alongside Paystack and the likes. And no one really knows what happened to OMG. I think it was a media company, right? And I mean, running a media startup is hard. At the same time, it was just these guys left OMG to start different companies. And for second time founders, it's easier for them to raise money, right? But then when um, I mean, Dash raised about 30 million, Float around 17, and now they like have different issues of their own, and the founders are being accused of, you know, uh, mixing personal stuff with business and affecting the business ultimately. And when you have situations and instances like that, you begin to question the importance of being a second time founder in my own opinion, right? So yeah, you mentioned, you mentioned Sim with ULESN and Conga, right? And that's a good example, right? But like ULESN is still growing, and I mean, we don't really know if a startup is a success story until maybe you exit or your IPO and all that, right? So it's just, I mean, for me, from my perspective, right? If you are leaving a startup to, I mean, yeah, ultimately it's the VC's decision to give you money or not, right? But I mean, what's it called? If you're an employee looking to work for a company, you deserve to know, how that founder has behaved in his own, like his or a previous startup, right? To make better decisions for your own self, right? So you know what you're getting into, right? And I don't know. Yeah, due diligence is important, but then it's just like, do VCs really do their own work, their homework? I mean, that's a question we should know,
Yeah,
right?
me, that's the
So it's like,
answer.
So is this
like
as the
I
resident
mean,
VC? Actually?
I guess
Yeah, but I think
so.
different investors have different levels of diligence that comes into play. And my assumption is if you're writing big checks, you should do the work that accompanies the big checks. And then this is as far as doing background checks, understanding what's happened in the past, speaking with people that know the founders, and this is in addition to all the business diligence. But I've heard that different people do this very differently. But absolutely, I agree. Diligence is very important.
Yeah, I mean, I wish Abasi well with his new startup, right? And hopefully, maybe he can crack the whole global genomics space, right? I'm actually very
Yeah.
against it, but yeah, hopefully he can. Because so here's the thing, right? I mean, I'm not hating or anything. So 54 gene was supposed to help level up Africa's genome data, right? By collecting samples and using it to create specific drugs that work for um, the African DNA, right? So the problem is, okay, the drugs that the drugs that people use globally, right, are based off Caucasian data, right? So for instance, like specific cancer treatments that don't work for Africans because they're tailored to the Caucasian DNA. So it's like, okay, 54G wanted to just, get lots of DNA samples and biodata, genome data, and test them, right? So that, they can partner with pharmaceuticals and big pharma and whatnot to create drugs, right, that are helpful to the African people. Now, if you're trying to do this on a global scale, doesn't that like contradict the previous problem you're just trying to solve? Right? I don't know if you guys understand what I'm saying. So it's like, okay, 54 was for Africa and you want to level up the. So why are you trying to do a global thing
At the global,
when,
yeah.
yeah, when like you've not really solved the African bit yet? So I don't know. So that's what I'm like saying. All right, maybe maybe there's more market for the global thing than the African parts. But yeah, it's just doing my head in. But yeah, I wish him the best of luck. I mean,
Yeah.
and hopefully he finds investors to 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 invest in.
Yeah, I see your perspective. Yeah, but we wish Abasi and the Syndicate Bio team the best, obviously.
Best, yeah.
Yeah, and yeah, in other news, there's amazing work around just fundraising. Interesting fundraise announcement with Mecho Autotech, who recently announced, I think, their pre-series A of 2.4 million, and really talking about how they're trying to optimize first auto repair for consumers, and then also bridge like the gap in the auto spare parts industry. So I think for most Niger African markets, cars are primarily secondhand when they're bought. So there's a huge secondhand market. That means there's a very huge market for spare parts, because when you buy cars that are not new, you very frequently have to change these spare parts. And then these are typically very informal. They don't have the infrastructure required. And then Meco essentially is trying to solve that in Nigeria. They have access to credit for about, I think, $670 million, $70,000, sorry, not $1 million, from a bank, which they're trying to use for financing to basically get credit lines to support the supply chain. And then the reason we're really discussing this is I think it's a really big problem. And then there are a bunch of players across Africa trying to target this problem in different ways. There's Garage in Ghana. There was Odigo in Egypt, which was one of my favorite YC startups, since which they've pivoted about 3 times. And then I think there's also mTOR. But just as an African, it's a big consumer problem. And then I think it's one of those solutions that, if built properly and at scale, will really help to first ease the life of consumers. So as people often buy spare parts and they don't know the quality of what they're getting, your mechanic can replace the same spare part 3 times in a row. And then also potentially helps even SMEs who are mechanics, because then they know the quality of what they're getting. They get optimal source for parts, and it's a really big market. I think about $8 billion in Nigeria alone. Across Africa, probably close to 50 billion.
I want to say something like very. I don't know if I should say it, but like, I mean, no, I'm just like, oh yeah, it's a big market. No wonder, like, the co-founder left to start his own similar company.
Not you shading the co-founders, but yeah, maybe there
I
was
mean,
a lack
I'm
of
not shading anyone, but
alignment
like, yeah,
on certain things. But then I think very often, like, there's probably different angles they can use to target when trying to solve the problem.
yeah. For Mecho,
Yeah.
I think like they launched to connect B2B and B2C clients, right? Like you said to um, spare parts vendors and all that, but they noticed that the spare parts were not actually readily available, right? And it was a problem to you know that some of these people that needed the spare parts, like car owners, would get to these workshops and they won't be able to get the parts that they needed. So, I mean, going into wholesale distribution makes sense for the company, right? And I feel like, I mean, only time will tell if they're able to capture enough of the market because it's a very very offline business, right? And
Mm-hmm.
you need to really convince these people that are used to the mechanics and the vendors that are used to a certain kind of distribution system, right? To come to bring everything online, right? And I think when I spoke with the founder, the CEO, he mentioned something around around Mecho being like an importer of this part and partnering with one of the investors, a Japanese investor, so importing this parts from Japan and bringing them here and all that. So like they have to think about the margins involved, for the vendors buying it, right? So it's like they have to compare which of the what's it called, the importers. I mean, if Meco is better than the ones out there, right? And all the pricing and all that. So it's a lot to figure out. It's a young business, and I feel like there's a lot of potential. And you mentioned, other platforms, in this space across the continent, like Wodigo. I'm not sure if I've heard.
Yeah, Odigo
Um,
pivoted. I think they. I don't know what they're doing anymore. I think they pivoted twice.
are you serious? Are you serious?
Yeah, I think they became a Web3 startup at some point, and then they
No
switched to
way.
something else after. I
No.
I loved Odigo. Like I kid you not, I really loved
Wait,
Odigo.
what do you mean Web
Web
three?
three.
I don't understand. How from mechanical stuff?
Yeah, they pivoted. I think yeah. Now, according to Crunchbase, Odigo is transforming the healthcare sector by automating physician workflows. They pivoted a couple of times. I think for me, I think Odigo has a very strong founder, but the pivots are crazy. But it also even the
Yo, the
pivots are crazy.
pivots
Yeah.
are crazy.
Even going back to Mecho, like while you were talking, something just resonated. Like I was thinking about the challenges that they have to face as they build. And look, challenges are nice to have when you're solving for this, but it's things like one, as they work with mechanics. You mentioned them working with a Japanese company and I think importing. But like locally in Nigeria first, I think there's this
Hmm.
very big appeal to used parts rather than brand new because mechanics give that the stamp of
Yeah,
approval. And you'd buy what your mechanic says you should buy.
and we can't really
Yeah,
afford the
exactly.
new ones,
So
to
these
be
are some
honest.
things that they will definitely need to bridge and figure out the best way for this to work. And also, when you start thinking about things like what do they want to prioritize SKU wise? Is it people that can afford, but there are not a lot of those available, which are probably like the higher end, newer luxury cars, and then older cars where people like Yemi cannot afford, and they were just like, please. But also, it potentially brings price stability if they're able to
Hmm.
build the solution they want. Because every time I've had to buy a car part, it's basically this crazy game of Russian relay where my mechanic says this, it brings a price. If I call someone Elatic more by myself, I'm getting an entirely different price. Yeah, it's crazy.
Yeah, I mean to be fair, I think they're just dealing with after sales, what is it called, parts. So used parts too, right? So even the partnership with the Japanese firm is to import used parts into the country. So I don't think they're like brand new, right? So, but I think there's also a what's it called? There are different pricing points, right, for the used part. Like you rightly said, you call, one mechanic, and you're hearing this, another mechanic is saying different thing for the same, used parts, right? So, um, yeah, I don't know. They said what did they say again? Like being an importer of this and going into the whole wholesale distribution will prevent. Um, oh, sorry, let me go again. So I think what they're going to import the most would be tires, suspension parts, brakes, and batteries. Um, I don't know. In the grand scheme of things, does that move the needle for
Yeah, I think
them?
it does
What do you
because those
think?
are like the car consumables. If you think about it that way, those are the bits that you
Yeah.
have very high demand for, and maybe less specific. So they probably you buy tires of certain types. So if I buy this
How
tire
frequently do you buy tire though? Because like, except what's the durability for tires? Like,
on
just tell
Lagos
me.
roads,
Okay,
they
my
don't
apologies. I
last
think
very
I was
well.
thinking. I was thinking with like Toronto mindsets. My
Please,
apologies. Please
we're,
continue.
we're Lagos people out here. So I think for tires, brake parts, like the government should even be their partners at this point, as the government is your car's biggest hope. If you drive 80 on third mainland bridge, one of
For
your
real.
shocks is definitely going to need to be changed.
I want to kind of take this on a different route and just focus more on like the pre-series A part of this, and just like the increase in like pre-series A rounds in our ecosystem. I want us to talk about that a little bit.
Yes,
Yeah.
something I absolutely want to talk about.
I don't know how
Having
many
worked,
pre-series A rounds like I've seen in the past month.
having worked as an investor,
Oh my god.
growth stage capital is becoming harder to get. And what this means is there are less global players actively playing in the market. Everyone is a bit more cautious. And then even founders. So in the biggest markets, currency hasn't been best friends of pitch decks. So if you look at it in nines, like you have to adjust your reporting based on where the dollar is now. So even if you had like Naira growth year on year, it doesn't look as great. And then there's similar currencies in Egypt, which is one of the larger markets also for startups. So what this means is first, because of that, people who have hit what should be their Series A targets are now basically raising pre-Series A. And on the investor side, investors are giving pre-Series A deals the same level of scrutiny that they would give Series A deals. And then this is a better valuations for investors. There are a bunch of things that happened during our years of boom that were done wrong. So like pricing, and then there's a lot of adjustments for that. I think the boom will definitely come again. Foreign investors
The
will
next
definitely
5 years.
come back.
Five. Okay, we'll see. Because I would project like another 10 years at least to reach the level that we were at.
Oh, so all the startups would die before then, yeah?
No, 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 no. Like the boom that happened with like the way people were investing and like
Yeah,
money
that's
that
what I'm
was going
saying.
to be
Like,
more
so if
controlled.
if we're gonna wait like 10 years, I don't think
Mm.
there'll be any startups left. But
I
yeah,
think there will be.
I'm just
I
kidding.
think
Don't mind me. Yeah, I'm just like
Yeah,
I feel like investors cannot just wait that long to deploy the capital that they have because I mean it's a cycle, right? They have to return the like funds, right? So the LPs, so they have to deploy. I mean, get me right?
yeah. I think the reality is like some investors through the boom period did not change how they invested. So and I'm going
Including
to
the whole
just
valuation game.
yeah, so like some investors were not the ones that would throw ridiculous valuation. Some investors didn't choose to change their processes because of what was happening in the markets. And I'll just like shout out to like TLCom. So TLCom, for example, would do what we do the way we did it. I spoke with some founders at some point. It's more like they will do because I'm not there anymore. But like I spoke with some founders at some point and they're like, oh yeah, there are people that after one conversation have given a term sheet. That's not the reality.
Yeah,
That's not how it should
I
work.
heard that a lot.
And then they'll be like, "Oh,
Yeah,
you guys are slow because you don't do it the same way these guys do it." But like, it's I'm trying to find an African adage for this. I'm sure there's an African adage somewhere about like food that comes to you fast and food you work for. So people that have always invested that way, the TLComs, the Partex, the Quonas, there are a bunch of investors that have always followed like these fundamentals. And then luckily, these are the growth stage investors that are still present in Africa. And when you look at a bunch of the pre-series A deals that will be announced in the course of the year, these are the investors filling those cap tables. Because those investors had to follow what I'll call the fundamentals, the market fundamentals for VC, because this is a core market for them. it's let me look for a random adage, but like these adages are not coming. But it's like the way someone would behave with his main chick versus his side chick.
Oh my god, is this
Oh
That's
wow,
exactly
That's
like
what an
like
African
illustration,
yeah,
founders are
like
like a side
bruh.
chick for
oh my
global
god.
investors. So like you do certain things a certain way. Not all global investors, but people that it's a minority part of their portfolio. So if I put 3% of my fund in a bunch of African startups, like I can very easily decide to say, yeah, you know what, I'm not doing this
I'm
anymore.
done. Yeah,
Or if Africa is a tiny part of your emerging market strategy, and your emerging market
which is for
strategy is a
most investors.
minority compared to your American
Mhm.
strategy, like and markets are tough globally, so it's not just Nigeria. Like it's been like the jokes around how the only way you can raise capital now is through starting an AI startup.
AI.
For real.
Yeah,
AI funded, AI powered, AI
yeah.
generated.
So we'll definitely see a lot more pre-series A's
Yeah.
and like
So what
that.
happens like during this pre-series A investment? So for instance, I raised a seed round like 2 million for 20 million valuation, which I think was kind of common
Mhm.
um, during the boom. So for I'm going for a pre-series A. I mean, I want to read the series A, but I can't, right? Because I don't have the numbers for the series A, and nobody's giving me free money anymore. So I have to settle for a pre-series A. And now, so let's say a global investor led the seed round, right? So are you seeing this pre-series A as well, like the likes of Telcom and the local guys that kind of are, I mean, like the founders call slow in due diligence, like way back. Are those guys that come at pre-series A to bring that valuation from like 20 to 15 to 10, right? While giving them the same amount of capital.
I think it's dependent on the deal. So this is not a general thing. If all the fundamentals are right,
Yeah,
so
but like I feel that's the thing, right? So if all the fundamentals are right, why can't you raise a series A?
if all the fundamentals are right, I'm coming. Most times you're raising a bridge or a pre-series A. We find very nice names for all these things. Probably because you're running out of money and you need money to do what you
Mm-hmm.
need to do. You may have not gotten like your Series A target because once you choose your raising a Series A round, people become very, 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 very intentional around things like what multiples are coming into play. There are things around your team. So beyond traction, you need to have a team that I, as an investor, believes has what it takes to then grow. So you definitely should already have PMF, which product market fit, sorry. And then after that, you should definitely have a path to scale and you should be able to communicate this path to me clearly and I should see it. Very
That's
often
if
you
I
may
don't
run out
see.
of money before you get there. Or
Yeah.
your numbers may have looked great. I don't forget, like we're talking FX always. That's foreign currency, which is USD. In two key African markets, Nigeria and Egypt, there has been ridiculous currency devaluation. Nigeria, Egypt, Ghana have all had ridiculous devaluations. So on dollar terms, your numbers will just not look as good as they once did. And this means you find an investor that believes that, okay, yes, you have the right fundamentals. They would look at your business. It may not be a great up round. If you were overpriced earlier, there may just be like a
Mm-hmm.
slight premium. Maybe you had a 20 billion post money valuation before, and then we bump this up to a 25. Or it may be a down round or a flat round, depending on what's happening with the business and how the investors view you. The reality is
Also, you're
you may
seeing some of
not,
these businesses have like an up round.
yeah, some do have up rounds. Like if it's a business I've always wanted to come into and you've come and said, hey guys, look, this is what I want for my Series A. I'm not there yet, but you have an opportunity to buy into me now and everything looks good, then there's no reason for me to pull you downwards. But then if certain things are not adding up, then it may be a down round. And if it's very if you're in a state where you really need money now and it's an emergency, and I'm the only one that's on the table because we're buying and selling and it's all about value. If I believe I can get a deal with you at a certain price and I think you'll be fine with it, like I'm not going to buy a plate for 10,000 if I get the exact same plate for 5K.
Yeah, I mean, have you finished your line of thought?
Yeah, I have. Sorry, guys.
Okay,
Are you
so go.
serious? I feel like you're still on.
Yeah, yeah, I feel like it was still in the middle and it just
Yeah.
But like, I think that's really it. Founders have gotten used to the reality of pre-series A's now. It looks like that's what most people are raising. But then some founders are still raising those bigger rounds, and it comes to a big part of the founder's job being a fundraiser. So that's why you need to have someone that one knows like the right people that will potentially bring money in, have decent relationships with investors even when they are not fundraising. So if all those things are in place, you know who to talk to. There is dry powder. Telecom have announced I
Hallelujah.
think they're raising 150 million fund. Is it Partech have I think almost 200 million.
Are you
Uh
serious?
yeah, I think
Founders
they
Factory
announced
also.
almost 200 million. There's Founders Factory. They have
You don't mean
uh
it. I don't know all this stuff.
I wish you know. It'll teach, please, please, please. Like, there's money, and like this money is going to be deployed, but like investors will not drop their money today if they don't see the value because they have most times like a 5 year investment timeline. So
Mm.
it's now you proving why they should give you this money now and not a deal that appears next year, even if it's a pre-series A.
Fair enough. That makes sense.
Yeah,
So
that's
yeah, I
true.
actually thought most of the startups raising at raising pre-series A, right, usually raise at flat or down rounds. I mean, because of how the whole tech ecosystem is right now. But yeah, nice to know like some of them actually get bump on their valuation.
Yeah. And it's still
Yes.
down to like what valuation you choose to do early rounds. And so some founders choose to go
Yeah.
very high. If you get a ridiculous valuation at your seed and you get to a
Mm-hmm.
series A or series A and your business hasn't caught up to that, like we're not playing the bigger fool game. A new investor coming in, I'm not coming to be a bigger fool. Like I've seen where your business is. I know what you need and I know what valuation makes sense for me. Because besides new rounds, we need to now, and this is a really good segue to the next conversation, we need to think also about what exits look like. And an
Right.
IPO
The
is that
steps.
great exit. But in a world where you don't get an IPO and you get acquired, it's now questions around okay, so what is an acquisition value? And everyone assumes, oh, I'll be acquired for 200 million because Paystack was acquired for 200 million. But like you need to look at the
Mm-hmm.
numbers. Everyone isn't Paystack. Like even post acquisition, Paystack is still in the top 2%, top 1% of African startups in terms of revenue, performance, etc. At the point where they were acquired, they were there. So if you're not there, you're not getting hundreds of millions. If you're not an outlier in your sector, you're not getting those. And even if you're decent and you get acquired, you look at things like what's the average acquisition value for startups globally? It's not up to 100 million. Like most startups that are bought at an average of I think 50 million or something. And those are decent acquisitions. So if you're a seed stage business, you call me and you tell me, hey, I'm priced at I don't know, 50 million. That's all well and good. But like if you don't
Yeah.
become a big exit, there's a good chance I'm losing money. And
Yeah.
so will I do a desperate deal getting at a bad price because your earlier investors decided to give you an awesome price? Not really. No.
Hmm. So
Okay.
I want to
Dummy.
How many startups have we even seen get acquired for 50 million?
Yeah.
hmm, let's actually start from there because I feel like a lot of startups don't actually disclose African startups essentially. They don't really disclose how much they get
Yeah.
acquired for. So we are not even
Actually, if you if
smart.
you if you were like acquired for 50, I'm very sure you would tell the whole world.
Fair,
I'm
fair, fair,
very
fair, fair,
certain.
fair, fair.
But
Actually,
yeah, like just like what we're discussing now. I mean, I think Ngozi Dozie or something. Yeah, Ngozi Dozie, yeah, the co-founder at Carbon. He published an article, like I think um, one of his newsletters earlier this month about African exits and how startups are very very like bold when it comes to, oh, you've raised some money. I mean, I'm a corporate, but yeah, you disclose how much you raised. Everyone is happy for you. You have traction numbers. So we have this number of customers, revenue. 10x, 100x between this period, blah, blah, blah. But when it comes to, okay, you're selling the company for whatever reason, maybe you're tired of it, maybe the business is not doing well, maybe the business is doing well and, you found a good buyer, then it's like, crickets. No one knows, how much a company were acquired for. Which, I mean, to his own argument, is not good for the ecosystem. And actually, I agree with that because
Yeah.
these are supposed to be like learnings for people building in whatever sector and segment, right? They're interested in. So in the past year, I think the only acquisition and that I reported the numbers was it Payforce and Fair Money, and I mean the both parties didn't tell me. I had to find out myself, right? And I mean that's decent, right, for both of them, right? And I think if you're building that space, you kind of know where your business is in terms of valuation. But yeah, I mean, we can just go back to the whole M&A conversation. But I just wanted to like highlight that. I mean, since
Yeah.
we're talking about numbers, yeah,
No, that's like a very very valid point because like I wasn't even able just like doing my like quick research to say okay what's like the average acquisition number. I couldn't really find anything, and it was just very very disheartening because it's like we're not able to benchmark. People don't have access
exactly,
to
yeah.
that information. Like, what if somebody
I mean,
sells
why
the
don't we
company
have
for less?
access? Maybe they should be telling us.
Yeah,
Yeah,
but
that's the problem.
these are private transactions. Like, there's
Oh my
no
god.
regulatory
Oh, what? Wait,
requirement
wait, chill. I don't get like.
to.
So when you're announcing the rounds, it's not private. Why are you telling us that you raised this amount of money?
So, like, announcements very often are signals for something. That's the thing. Acquisition
Exit
saying,
should be
okay, I
signaling for
was bought
something.
is a
Yeah.
signal for something. Like,
And now
how
signal
much
for
was I
exit.
bought for? That's none of your
Mm-hmm.
business.
But then why do you announce the amount that you raised if then you're not going to announce the amount that's like you exited for?
You know, so,
Exactly.
well,
Or you announce,
See,
okay, we have 1 million customers. Why
like
do I need to write about that? Why? Okay, I mean, you think it's important, right, as a
yeah, it's
founder, and I
signaling.
get it, but it's nobody's business too. Like, as you know,
yeah, like
the grand scheme of
congratulations
things,
and
like,
so what?
Yeah,
yeah,
so
move on, right? If that's how we want to play the game, so everything
I,
is like, oh yeah, it's signaling. As
yeah, but it's the
exits
business.
too should
So
be
I'll give an
signaling.
example. If I came in and said, "Hey guys, I'm a startup in X space, and now I've raised 50 million," boom. Automatically, one thing, my competitors are shaking because
Fair.
they know the things I'm doing are things they cannot do because they don't have that money yet. Two, a lot of times people even announce fundraisers to signal potential investors for the next round. So when you see an
Mm-hmm.
announcement, there's a good chance that this is a deal that happened, I don't know,
Yeah,
six
like
Some
to
months
months
back,
nine,
yeah.
ago.
10,
Yeah.
a year ago. So it's signal for people to look and say, what's happening here? And then sometimes it's also for customers to see and say, these people exist. So in addition to marketing, like the PR kind of is great. But look, if I could, I would love for everyone to tell me how much they were acquired for. It makes multiples easier for investors because we know what revenue multiples people are paying for different companies.
Mm-hmm.
But yeah, it's still always down to like the discretion of the founder.
I agree. I think one thing I'll add to that. So when Paystack announced, or rather when the whole Stripe Paystack thing, came out, so didn't you think that was a good signal, like for the whole ecosystem to
And
foreign
it
investors that
was.
okay, yeah,
Yeah.
exactly. So I mean, it's also signaling, right? If even if your acquisition is bad, even if it's 5 million and you raise maybe 20 million, there are different startups in the US, in Europe, there is millions and billions, and they are get acquired. Look at the Hopin story, for instance, right? They
Sorry.
raised how many?
Sorry
I
for
think
the laugh.
got they had $7 billion in valuation, and it got sold for about I don't know 35. I mean, it's a part of the business, right? Meanwhile, like the main company is still worth 400 million or so. So it's like, oh yeah, regardless of us being a shitty company, right? Yeah, these are the numbers. I mean, it's not all of them that disclose how much they got acquired for,
Yeah.
but there's some kind of transparency in the West that we don't have here, and it's just very unfortunate. I'm never going to lie because there's a lot of things that we just talk about. So how do we grow as an ecosystem?
Shitty
Yeah,
is
so
such a
that's
harsh
3%.
word, man. Just say I'm a shitty startup. Yeah, but
Because
absolutely,
no,
like
think about it, 7 billion to 400 million. Like, bro, I mean, all right. I mean, yeah,
Yeah.
shit is probably harsh. Yeah, 7 billion to 400.
but
I don't
definitely
know.
not great.
Yeah.
Yeah,
I kind of wanted to just lay the background for like this conversation around acquisitions, and why it's like such a hot topic right now. um like coming out of like 2022, we started hearing about like a possible recession that was awaiting us in 2023, and that news just continued to amplify with people projecting that like it was going to be worse than 2008 recession. So people started holding on to their money. Same thing with investors, and then we ended up just terming this phase like the funding winter. And that's all like people have been talking about since February. And so like we've just been watching the funding numbers trend downwards and downwards. Like every quarter, we're like, okay, funding reduced compared to last year. Funding reduced compared to last year, and it almost seemed like a very unfortunate situation. And you didn't seem like any major exit was going to happen. But I think that um, the acquisition of Tunisia-born startup InstaDeep really, really contributed to the excitement around like acquisitions as an exit strategy for African startups. And of course, like people have been talking about this in the past, like M&As, M&As, M&As. But then it after like, and this is post like Paystack, because Paystack was like a major turning point for African startups. And then now like InstaDeep was also just like a major turning point this year for us. Um, it actually cost a lot of, or it's costing a lot of things in Tunisia right now, where a lot of people are actually trying to build for foreign
yeah,
ecosystems
exactly.
so that they can get acquired, which is very
I'm
interesting.
sure. I'm sure if they didn't know the price, they won't be that enthusiastic. But yeah,
Exactly.
just going.
Right. And then, so wink, wink, yummy, so you can just
Yeah,
take the shots. But yeah, so that's caused so much excitement, and we've just started seeing M&As as like an exit opportunity for founders. Especially those that might be running into like capital related challenges, right? We've seen that just like save them or save their business in some way. So I want to go over some recent acquisitions, right? The ones that happened in September, especially because we had two major acquisitions this month, which was very, very interesting. So B Trust, which is a Bitcoin software development company founded by Jack Dorsey of Twitter and Jay Z, acquired Koala, which is a Bitcoin development talent training company, earlier this month. And obviously, that was a strategic play for Koala, because apparently they had been struggling to access funding. I think mostly because of like their not for profit nature. So like a lot of people are just like,
yeah,
okay,
yeah.
what's happening? So they're able to get acquired. It was a very great exit. Everyone's happy. Everyone's jubilating. We don't know how much they were acquired for, but they were sure acquired. So we're happy for them. And the same thing with SendChamp, which is a cloud-based communication startup, which was acquired by Hugo Host, which, in my opinion, was also a strategic acquisition because, like, now it's Hugo Host is able to expand their business offerings and just solidify themselves as like the one-stop shop for digital services, of which Hugo Host had actually acquired two startups previously, over the years. So this is like the third startup that they're acquiring, which is very interesting for me. Just seeing them like grow by acquisition as opposed to like building from ground up. So those are like two
Yeah. Which other
major
startups should be doing?
should be or spinning off their own business. Um, but yeah, no. So
But
that's
we
just
kind
what
of have like some background on like kind of numbers. I think Tech About published something last week
about the
around,
numbers.
yeah, but like in very, I mean, not like clear terms. Just okay, yeah.
Yeah, I
So
did see
I
it
think they
though.
said, oh really? So
Yeah, I did
Sencham, they
see the
said
numbers.
Sencham raised about. It was a follow up to this, the first acquisition article.
Oh, okay.
So Sencham raised about $400,000, and the acquisition was in the mid. What was the term used again? Forgotten, but like in the mid 100,000 to 900,000. range. Yeah.
Yeah.
So it's still like around 400, 500, 600 ish, right? So
Interesting.
if I understood what they meant by that. So it's like, I mean, investors probably got 1x or 1.5x
Which is
of the
pretty.
investment.
Yeah.
I mean, it's not bad, but I mean,
Yeah.
the milk
Yeah.
probably doesn't want that.
It's better than zero, I guess. So
I guess. Yeah.
yeah, I mean, is it better than zero?
Yeah, man. Obviously, investors don't want 1.5x. I think most times when there's an acquisition, investors will probably more likely opt for shares in the bigger company
Oh
than
yeah, yeah, yeah. I
cash.
think that's what
Like
happened
if
with
it's not a
Hugo Boss.
sizable acquisition, like just give me equity in your company and continue
Yeah.
growing. Hopefully, like you're able to get decent multiples. And then sometimes like these acquisitions are necessary because if like we spoke about distress and pre-series A's, it's actually the same thing with acquisition sometimes. Like
Yeah.
you've run into a wall and you could either well die or become part of a bigger company that seems to have figured out some things that you probably haven't, such as fundraising or maybe just great business economics. And I think we Ugo is this more great business economics
Yeah.
than fundraising.
Yeah. I think so too.
Could
Cause
be
like
both.
Could be
maybe,
both.
maybe,
Maybe Tage, you know something we don't.
maybe.
No.
And I think that this was what Sandy was hoping for with like trying to save their ass. And I'm
Oh,
like,
oh my God.
Yeah.
I just opened a can of
Sandy,
worms.
Sandy. I'm
That's a
telling
decent kind to open as we're talking acquisitions because the acquisitions game is hard. Like the bigger you are, the harder it
the
is for
harder
you
it
to be
is to get,
acquired.
yeah.
Because for smaller players, like there are a bunch of local players that could acquire them, and then you just become part of that journey. So like the founders probably join like senior leadership there, and maybe a product that would have taken me X amount of months to
Mm-hmm.
build and X amount of months to scale. You essentially just become a strategic acquisition. But on the other hand, when you're very big and you run into cash constraints like a bunch of growth stage startups in Africa, names withheld, have come
Oh
across
God.
recently, what happens then is you need to find someone big enough to buy you for a decent enough price. So Sandy, for example, even a 30 million acquisition wouldn't be like I don't know if there was a 30 million acquisition on the table, but like if there was a 30 million acquisition, like nobody around the table would be happy with it.
Mm-hmm.
Like I'm
I
sure
mean,
there's
they're
some
valued at
investors that
100, I
would probably
guess.
even rather say, you know what, like die rather than be bought
Yeah.
for 30. I'm not saying anyone said that. Like I'm not saying there was any 30 million acquisition on the table, guys. But like, yeah, I think that's how it is. So the players that can buy you, there are fewer of them, and till you get to the point where as founders you're proactively thinking about what acquisitions look like even while you're building and not looking for acquisitions. So if you get to the point where you need an acquisition to happen, one, you already know who the target players that you could work with are. You already know what these players want in terms of like metrics, and then you're already aligned with that. It makes it an easier journey, particularly with like bigger strategics. Yeah.
Hmm. Interesting.
But yeah, this has been an amazing
Oh,
first
I wanted to
episode.
also say
Dammy, please tell
something.
us what you want to tell us.
I wanted to talk about to this point, like Money Point's acquisition of Kopo Kopo, the Kenyan fintech, because I feel like that's like very interesting. Because I was talking to
Why do you
somebody
think
about
so?
this. Well, maybe I'm blowing this up, but I just thought it was very interesting because like now they're able to expand to a new market without having to expand to a new market, and because I've also gotten a lot of exposure to um a number of like African fintech health tech startups recently, and I'm wondering if that's going to be the trend moving forward, where a company that is looking to expand to a new market just like acquires in within our ecosystem, of course, acquires like say I'm a Nigerian startup looking to expand to like Ghana, and I just acquire like a Ghanaian company that does like similar things that leads to similar products.
I think there are probably different strokes for different folks in that regard. Like our big daddy of acquisition to expand is AutoCheck. I think in the last
Bruh.
3 years, we've probably done, I don't know, five, six acquisitions across different markets. So that is their primary expansion strategy. And then if it's in a sector where it works for you and you're able to get like these assets at a decent price, then that's a great expansion strategy. I think for Money Point, it's both from a market and a product perspective. So if you're buying a different product in a different market, like I mentioned, like that's great. That might not be their strategy for every expansion, but
Hmm.
maybe for major expansions. Like if yeah,
Okay. I like how you
Yeah, I
just
think it's an
spoke.
interesting acquisition too, to be honest. And for
Yeah,
the Kobo guys, they probably made very decent money back.
I'm
I
sure
think
they
they
did.
raised about 5 million annual valuation, and we know Money Point has money.
Yeah.
Yeah, so who knows? Probably, Kobo
If
had a 4x. What do you
if they
say?
had given us the numbers, if they had put the numbers out there,
Yeah, so it's like, oh, we know how much, how big Money Point is. We
yeah.
know, you know, how much they have to
yeah, Money
spend
Point
and all
stakeholders
that
are
kind
always
of
happy
stuff.
to tell us they have a big bag of money that they are sitting on.
It's just like
Yeah, I
them
mean
putting
that's the
their name.
general yeah. We'll find out
Okay.
soon enough.
I guess we'll find out. I don't know. Do you guys have any projections about like acquisition or ecosystem? Is there like a space that we should expect more acquisitions in, or we just kind of need to watch it play out?
Absolutely. At the
Oh,
beginning
so
of the
fintech.
year,
To get into
I had an interview with someone, and like my feedback was, look, fintech. First thing with digital banks, there are a lot of new banks. There will be a lot of
bro.
consolidation there because there's very little differentiation for a bunch of them. So it's if I don't have differentiation and I can't raise more money, maybe I find someone that needs my product and they'll buy me, or a bunch of us will just come together to become bigger. I
Yeah.
suspect also there may be acquisitions
I don't
like
see the
the
latter happening though.
which are
But yeah, go on.
consolidation.
Yeah, like where like people coming together to become bigger.
Why though? Is this an ego thing or?
Yeah, I think so.
Yeah, same,
Hmm.
same.
But I mean, I'm very very happy to be what's it called to be
to,
wrong.
to be wrong?
But yeah,
Well,
Yeah.
I'm like quite sure
But yeah,
that
definitely there's gonna
that
be a lot
happened.
of fintech acquisitions. I suspect that in the next and like we can write this down somewhere, in the next 6 to 8 months, we'll probably see like two, three major strategic like acquisitions from larger global players. And then this is just because a lot of funds,
I'm Prophet Yemi.
yeah, 6 to 8 months. I've spoken and so it shall be.
Hmm.
Yeah, and this is because like a lot of funds are starting to get pressure around their first couple of exits, and these are particularly funds that have finished like the investment process from their fund one and are deploying like fund two, fund three. Like there have been startups that have been around for over a decade, and like they're getting to that point where there needs to be a pathway to an exit event. And I suspect that will be acquisition. So these will probably be like hundreds of
So
millions type acquisitions.
they don't want to force the global players to buy them.
No, they'll buy now. They'll buy. They don't get trust. They go buy them. No worry.
How
Yeah.
like what's the
So,
value proposition for
I
them?
suspect what will happen, and this is a Yemi suspicion.
Mm.
Um, First, the global markets are starting to ease out a bit. I think on the public front, so Instacart has listed. There are a bunch of other global players that are looking at going public, and they probably want to add the Africa stamp, and that's one channel. Also, they're just large global corps that African acquisitions make sense for from a strategic perspective. So some of these
Like,
players will start to play like across different sectors. They're different players. Damn me.
okay, give one example
Yes,
because
now
this your
like what
prophecy.
now? Like I'm like
This your prophet.
I'm trying
I'm
to
trying to
actually
think.
no,
Same.
it's not I'm not trying to like unearth his preference. It's just
I'm
I
just
don't
trying to
see
think.
any glow. I mean, apart from
Yeah,
fintech, yeah, I don't know any other sector that there's a
Hey
global
guys,
player I'm
wait for
interested
your
in.
6 months and you see. So, for example, like I don't think it's far fetched for Amazon to do a couple of acquisitions. Like Amazon has mentioned how, and I'm not saying they will, but Amazon has mentioned constantly that they're doubling down on Africa, building out hubs. There are a bunch of players that make sense for them to buy in different markets.
Okay,
or
fair.
that they could consider buying in different markets. And these are across different pieces of the value chain. Logistics, in a market where logistics works very differently than in most markets where they are present, logistic startups will make sense. Also, like there are startups that already have a bunch of like the cogs that they will need, but from like B2B supply to B2C, rather than trying to, because we all forget Amazon has a very big B2B business. And like these will be
Mm-hmm.
easy cogs for them to add in. Like when you look at acquisitions that happen in other emerging markets, like you start to say, yeah, maybe these opportunities exist here. And like I know I'm doing one of those things where you're beating around the bush without like pointing and saying, yeah, this guy will buy this guy. But Prophet Yemi has spoken. Like we'll probably see one or two acquisitions in the next 6 to 8 months. If they announce it in 15 months, it happened before.
Fair point.
Yeah. And I
Okay.
would see
The
it's
Amazon one
things
I
like,
see it, yeah.
yeah, I wouldn't even be surprised if I don't know, a global, for example, decides, Chowdeck is giving us a run for our money in this Lagos. So let's just buy them.
But that would be mad though.
It
Yeah.
That would be
would.
mad.
It would be a crazy exit.
Yeah. Probably like 10 million. I think they can fork out 10 million for it.
10 million.
And just,
They'll probably fork out more.
Yeah, more because
Like with the pace at which
more.
I
Chowdeck
think
is
more too.
running.
Yeah,
Like
Chadek
they're
is
running.
yeah.
They're probably in my mind the only I'll say B2C like food delivery startup that is able to supply like three parts of the value chain now. So they obviously do high end, they can do mid markets very easily, and then they're like 1 2 cogs from being able to like do like bottom market also. And like that's amazing. We need to get them on the
That's crazy.
podcast. Tage, we
Actually,
need
we
to we need
do.
to get Child Deck. We want you on the podcast.
If you're listening
Yeah,
to
that's
this,
true. I actually should write about them. I don't know. They've not raised or disclosed any round yet,
We will bring
right?
them.
they're
No
very
worries.
stealth.
Child Deck,
But
we're coming for you.
Yeah.
all right, I think we've come to the end of this episode. This was really great. Great conversation. We plan to talk for like what 30 minutes, and we're here for almost an hour. But really grateful that you all are able to make it to the end of this episode, and we hope that this was valuable for you. This was useful. We're trying out something new, as Yemi said earlier on. So please let us know your feedback, your thoughts, some things that maybe you think we can do better. But yeah, you know, it's a wrap. We'll see y'all in the next episode. Bye.
I by peace.